Okay, let's now resume from where we left in the last session. So in our previous session, we did talk about, let's have a quick recap of what we did discuss in our previous lesson. So in our previous session, we did look at throughput accounting, which is a technique applied in an organization that is using just in time. So if we are dealing with the throughput accounting, we are saying the organization is operating in a just-in-time environment. So there are processes that are delaying maybe delivery of our products. So we are operating in a just-in-time environment, but our process is being delayed. It could be is being delayed by a certain machine. So in throughput accounting, we identify that which is delaying the process, or we can give it the name a bottleneck. So we identify the bottleneck. So after so the first thing, you identify the bottleneck. After you've identified the bottleneck, you find the best way of maximizing the benefit from that bottleneck. So if you are finding the best way to maximize the benefit from the bottleneck, this is where you are calculating the throughput accounting ratio. So if the throughput accounting ratio is greater than 1, it means we are maximizing the use of the bottleneck. We can use the theory of constraints to identify the resource, which is a bottleneck, and also come up with ways to improve the performance of the bottleneck. Then to calculate whether we are now maximizing our efficiency from the bottleneck resource, we then use the throughput accounting ratio. Besides that, we also did talk about how you identify a bottleneck resource. A bottleneck resource, you can identify this resource by the number of units that it produces. So if it produces less units, it's a bottleneck. If it produces less units, it's also regarded as a bottleneck if it takes the longest time. So we can identify a bottleneck resource based on the units that it produces or based on the time that it takes. Then also we did go through the calculations. Number one, how you calculate the throughput. We also did look at how you calculate the return per factory hour, the cost per factory hour, and the throughput accounting ratio. So the cost per factory hour, this one includes the labor cost. So cost per factory hour includes the overheads in the factory plus labor. In throughput accounting, labor is assumed to be a factory cost. So labor, we classify it under the factory overheads. So we did also talk about ways to improve the throughput. So the question can say, how can we improve the throughput? So it means how can we improve the return from that resource that is not that resource that is delaying the process. So we did look at some of the ways we can use to improve the throughput. Then also we did talk about environmental costing. So as an organization, our focus should not just be on the financial performance and maximizing profit. Let's also consider the impact in the environment. So a good organization is that which does not negatively affect the environment where it is operating. Or if it comes out that we do affect the organization, the environment to some way, we need to know the cost to the environment so that we can be able to come up with ways to mitigate the costs. So we need to conduct environmental costing. So there are different types of costs that we can incur. We have conventional costs, the potentially hidden costs, the contingent costs, the image and reputation costs. We also did talk about accounting for environmental costs, where we said we can use the input or output analysis to account for the environmental costs. You can use the material flow accounting To account for the environmental cost, we have environmental activity-based costing, environmental life cycle costing. So today, let's introduce something new. Today, we are going to look at relevant costing. And if time allows, we also need to introduce another topic. So let's see how we can go. But if we are able to cover relevant cost in time, we are then going to cover as well cost volume profit analysis. So let's start with relevant costing. So let's start with relevant cost analysis. So relevant cost analysis, it's a technique that we make use of when we are making decisions. We need to understand which costs are relevant and which ones are not relevant for a certain decision. So a cost that is said to be a relevant cost, these are costs which are, sorry, can I answer that? Oh, sorry. So a relevant cost, what kind of a cost do we regard as being a relevant cost? So a relevant cost, we say this one is a future. If it's a relevant cost, this is a cost which is affected by the decision. These are costs which are affected by the decision. So if it is relevant, it means it will either increase or decrease as a result of the decision. So the costs are affected by the specific decision we are going to make. That is a relevant cost. It is affected by the decision. So relevant costs have the following characteristics. Characteristics of relevant costs. Characteristics of relevant costs. So the first characteristic of relevant cost, a relevant cost is a future cost. The other characteristic, it is an incremental cost. The last one is a cash flow cost. So a relevant cost is a future cost. What do we mean by a relevant cost? If we are making a decision, a relevant cost is a cost that you are going to incur in the future. A relevant cost is a cost that we are going to incur in the future. So a cost that we have already incurred in the past, we call it a sunk cost. If a cost is said to be a relevant cost for decision-making purposes, it must be a cost we are going to incur in the future. A cost we have already incurred in the past is called a sunk cost. So if you're making a decision, the cost you have already paid for in the past is no longer relevant. Why? Because if you choose to go ahead with the decision, or if you choose not to, the cost will not change. You have already incurred this cost. A cost that we consider when we are doing relevant costing is a cost that will arise as a result of the decision. If it's a cost that you have already paid for in the past, it's no longer relevant. So a relevant cost is a future cost. This means that we are going to incur it as a result of the decision. We are going to incur this cost as a result of the decision. That is, the relevant cost is a future cost. And if the cost is to be regarded as relevant cost, it has to be incremental. So if it is incremental, it means that it will result in an increase in the cost that we are already incurring. So if we go ahead with this decision, the costs that we are incurring are going to increase. So if we are still going to be incurring the same cost, then it means the cost is not incremental. So a relevant cost must be incremental. By being incremental, it must increase the current cost. It must result in an increase in the current cost. So the cost that is relevant, let it result in an increase in the current costs that we're incurring. Then also a cost that we regard as being relevant, it must be a cash flow cost. A cash flow cost, it means that it must result in a cash outflow. It must result in a cash outflow. It must result in a cash. It must be a cash item. That is, it must result in us losing money. Let's take, for example, depreciation. It's not a relevant cost. Why? It's a non-cash item. Depreciation is not a cash flow cost. We don't lose money in the business as a result of depreciation. Of course, it's an expense we recognize, but it's not a cost that results in the organization losing money. So if it's a relevant cost, we can consider, does it result in us losing money? Can it change our total cost? For example, fixed costs. Fixed costs, in some cases, they can be regarded as not being relevant, but as long as they are going to change, then they become relevant. So we're looking at incremental costs. So if the fixed costs are not going to change, they are not relevant. But if the fixed costs are to increase as a result of the decision, then they are regarded as being relevant. So a relevant cost is a cost that will increase the cost that you're incurring. Even if the costs are fixed, as long as they will increase as a result of the decision, they are relevant. Let's take, for example, we are currently offering ACCA. We decide we want to offer CIMA. So we are offering ACCA, we decide now we want to offer CIMA. So for ACCA, we have rooms that we are using, and we are paying rentals for the rooms. So if the rent is not going to change, if we are going to introduce CIMA and we are going to be using the same premises, the same facilities, the rent is not going to change, then the rent is not relevant. Why? Because it's not incremental. It's not going to result in an increase in the rent that we are paying. But if we need an additional room for CIMA, if we need an additional room for CIMA, even though rent is fixed, but if now we need an additional room that is not part of the rooms that we have, it is going to result in an increase in our rental cost. So in that case, the cost of rent becomes relevant because it's an increment to our total cost. But if the cost is not adding to the cost that we have right now, it's not relevant. Then with the same decision of either to introduce CIMA or not, if we already have textbooks, we bought textbooks for CIMA last year. Of course, we are not yet using them, but we got them from someone who was doing CIMA, and they gave us these books at a very low price. So if we're now making the decision of whether to introduce CIMA or not, the cost of the textbooks is not relevant. Why? Because even if we decide not to offer the program, it will not change the fact that we have already paid for this. So a cost you have already paid for is no longer relevant for decision making. So a relevant cost is a cost you are going to incur in the future as a result of the decision. Then, which costs are non-relevant? So certain costs are relevant for decision making and other costs are non-relevant. So let's look at costs that we can say these ones are non-relevant costs. So for decision making, which costs can we classify as being non-relevant costs? So the non-relevant costs that we can talk about, we have a sunk cost. So if we are considering how much should we go ahead with this decision, we cannot make our decision based on sunk costs. So what is a sunk cost? A sunk cost is a cost we have already incurred. This is a cost we have already incurred. In the past. So it means that if we choose to go ahead with the decision, or if we choose not to, it will not be affected. We have already incurred this cost in the past. It's a sunk cost. A sunk cost is like in the same decision we're talking about, if we've already bought textbooks for CIMA, even if you choose not to go ahead with CIMA, you cannot avoid that cost. It's a cost you have already paid for. So it's not going to change whether you go ahead with the decision or not. So a relevant cost, it should be a cost which will be affected by your decision. So if you make the decision, the cost you have already paid, it's not going to be affected. It won't change because of the decision you make. So that is a sunk cost, a cost you have already incurred in the past. Then besides a sunk cost, we have a committed cost. So a committed cost, this is a contractual cost. So if it is a committed cost, we are saying this cost, you are going to incur it as a result of a commitment you made in the past. So this is a cost incurred as a result of a commitment made in the past. As a result of a commitment made in the past, although it might result in future, although it may result in future outflows. So remember we said the relevant cost, it will result in a future outflow or future payment. So we have certain costs that are not relevant. Of course, they might result in a payment in the future, but we still say they are not relevant. So a committed cost, we are saying we have made a commitment in the past. Let's say we entered into an agreement with an advertising agent that they are going to advertise our products. So we agreed every year we are going to be paying them a certain amount of money so that they can advertise our products. So we pay this cost annually, meaning that we are going to be paying it even next year. So if we decide to introduce CIMA, this advertising agent is now also going to start advertising CIMA for us. So the cost of CIMA, of advertising CIMA and ACCA, we have costs that we will pay in the future. But those ones are as a result of a contract we entered in the past. It's a future cost, but arising from a contract we made in the past. It's not relevant unless maybe there are additional costs for advertising SIM. So as long as the costs are still the same as those we agreed in the past, and there are no additional costs for the additional service we are offering, then it's not relevant. So a committed cost, we might make some payments in the future, but these are contractual payments. They are not based on the services we are offering. They are not based on the subjects we are offering or programs we are offering. So a committed cost is based on the contractual agreement we made. So even if we stop, we don't give this, we don't go ahead with this program, because of this commitment, we'll still make the payment. Then we have fixed costs that are not incremental. They are not relevant. Fixed costs. These are not relevant as long as they are not incremental. These are not relevant as long as they are not incremental. So if they are not going to increase as a result of the decision, then they are not relevant for decision making. So they are not relevant if they are not going to change. Then other non-relevant costs, we have depreciation. So depreciation is part of the non-relevant cost. Why? Because it is a non-cash flow cost. Depreciation or amortization. This is not relevant. Why? These are non-cash flow costs. So the relevant costs, they have to have a cash flow impact, of which depreciation or amortization, these are non-cash flow costs. So for depreciation or amortization, they are not relevant. Why? They do not have a cash flow impact. These do not have a cash flow impact. Then also uncontrollable costs, costs that we cannot control. These ones are costs where we have no influence over. So for example, maybe we'll be required to pay tax. If we decide to introduce SIMA, you'll be required to pay tax. Of which that one, we are not the ones that decide the amount of tax, the corporate tax. So there is going to be an additional cost of tax that you're supposed to pay. But we have no control over that. So the uncontrollable costs are not relevant. These are costs that cannot be influenced by the cost center. If it's a department from, if it's a department which is part of a large organization, and we are getting apportioned head office costs. So in our department, we are receiving some costs from the head office. So in making decisions, we can't make decisions including those head office apportioned costs. Why? Because those are uncontrollable costs. We have no control over the head office costs. As a department or as a branch, we have no control over the head office costs. So if you're making decisions at branch level, we can't incorporate those costs and say, no, we can't go ahead because we receive. Those are uncontrollable costs. They are not relevant for decision making. So let's move on. Then there is also another relevant cost, which is called the opportunity cost. So when you are making decisions, you need to consider the opportunity cost. So there is need to consider the opportunity cost. So what is the opportunity cost? So if you're looking at the opportunity cost, this is the opportunity cost. We can say this is the benefit. The benefit sacrificed. This is the benefit sacrificed when one course of action is chosen. So the opportunity cost is the benefit sacrificed when one course of action is chosen. We can say in preference to an alternative. So you had two options and you decided to choose one and forego the other. The benefit of the next foregone alternative, that is the opportunity cost. So if you are making a decision, you can decide, okay, we want to introduce CIMA. So there is CIMA, there is CIS. So we have CIMA and we have CIS. These are options we can introduce. Currently, we are offering ACCA. So we have to choose one. Maybe we can't choose both. So the opportunity cost would say, what revenue would be generated from CIMA? If we opt for CIMA, maybe let's assume would generate a revenue of 23,000 a year. What about CIS? CIS would generate a revenue of 18,000. So if we choose to go for CIMA, it means we have lost the benefit we could have obtained from CIS. We couldn't choose both options. So when you choose one, the benefits you have lost from the other option, alternative, that is the opportunity cost. So it is the benefit lost from the next foregone alternative. It is the benefit lost from the next foregone alternative. Okay, let's move on. So that is the opportunity cost, is the benefit from the next foregone alternative. Let's move on. So we choose a decision which minimizes the opportunity cost. We shouldn't lose a bigger benefit. We choose a decision which minimizes the opportunity cost. So when you are choosing which decision is the right decision, it should minimize the opportunity cost. So in other words, we can also add to say, so when you're making a decision, an opportunity cost is a relevant cost because you need to consider it. So opportunity cost is is part of the relevant costs, which should be considered in decision making. So the opportunity cost is part of the relevant cost. When you're making a decision, opportunity cost is part of the cost you should consider. However, you might face challenges if you are determining the opportunity cost. So the main challenge that you can face is estimating the opportunity cost. So the challenge that you might face a challenge of determining which benefit have you lost. So which one is the better option? Or which other alternatives did you lose? So you might face challenges in identifying the benefits of the other alternatives that you did not engage in. Okay, let's move on. So let's talk about the minimum price. So we can get an order. We can get a customer that will say, okay, I want you to do this job for me, but I am offering you 10,000. So I have a task that needs to be done. But here is my offer. This is what I'm willing to give you. So you need to come up with the minimum price. So there is need to come up with the minimum price. So the minimum price should be equal to, or should be greater, not equal. It should be greater than the cost. Because remember, the price is what you're going to get from this order, and you can't charge a price which is lower than the cost. So the minimum price that you are to charge should be at least greater than the relevant cost. So let's have that statement down. When accepting an order, the minimum price should be greater than the relevant cost. Why? Because remember, the relevant costs, these are the costs for the decision. So if you accept a price lower than the relevant cost, you're making a loss. So in order to ensure a profit is going to be, remember, the selling price minus the costs. You get your profit. So we are saying that when accepting an order, determine the cost first. Accepting the price, or when we are charging the price, we should know first the costs associated with this order. Then the price should be greater than the relevant costs. Not should be greater than all the costs, but greater than the relevant costs. So take note of that. So if there is a contract, the minimum price should be greater than the relevant cost. So this will be useful when you're determining your negotiation platform to say, okay, I can negotiate up to this much. So if you're negotiating, you cannot negotiate to go below the relevant cost. Can we accept an order exactly if the relevant costs are equal to the price? In some cases, yes. If the relevant cost is equal to the price, we can accept the order, provided maybe there are other non-financial benefits we can get from that. So this is where we are operating at break even, where the costs are equal to what we also get. So We cannot go below the relevant costs, but normally we can accept an order if the relevant costs are equal to the price. So if there are some other benefits that can arise in the future, the business can accept. The business can accept a contract where the relevant costs are equal to the price. Such as we are doing something that will benefit the community, and we are going to have a good reputation in the community. So, of course, the costs and the price, we are at break even, but it's going to give us a benefit in terms of good reputation in the market. So there are other benefits we are likely to derive, which are not financial benefits. We might also accept the project where the relevant cost is equal to the price. Then the questions are likely to ask you to calculate relevant cost for the material, relevant cost for material. These are areas that we are likely to come across in the exams. So relevant cost for material, relevant cost for labor, relevant cost for the assets used. So also, and relevant cost in joint products. So these are areas where you need to know. So let's start with the relevant cost for material. Relevant for material. So relevant cost for material. When do we use this? So relevant cost for material, we are saying we have received an order. And this order, this job order requires material. So how much is the cost of material for that order? So the firm receives an order that requires material. So when you're calculating the relevant cost for material, you are determining how much cost of material should you include in the cost of that job. So relevant cost for material. So relevant cost for material, you can say, if the firm receives a job order, they use the relevant cost for material in order to determine how much to charge the job. If maybe what you only need from the job is material, we can calculate the cost of material, then we charge the job. So if we need material and labor, you calculate the relevant cost for material and the relevant cost for labor, then you charge your price. But we want to look at material first. How do you get the relevant cost of material? There are questions you have to ask yourself. If you're determining the relevant cost of material, there are questions you have to ask yourself. Which are those questions? So when you're determining the relevant cost for material, the first question, Let's have it as an example. KD Limited receives a job order requiring 300 kgs of material A and 400 kgs of material B. So if we are determining the relevant cost for this material, there are questions you have to ask yourself. Let's go to the first question. Question 1. The first question is, do we have the material in inventory? So we want to determine whether material is relevant or not. The first question is, do we have it in inventory? Okay, yes, this order requires 300 kgs of material. Do we have the 300 kgs already? It requires 400 kgs of material B. Do we have the 400 kgs of material B already? The answer is either yes or no. Let's start with yes. So mashiga tukutazanya relevant costing. So we are now looking at relevant cost for material. So for relevant cost for material, tuguti wapiwa an order, you go to produce certain units or a certain product. So after you've received an order to produce this product, you need to consider how much is the cost for material. So when you're considering the cost for material, you only consider the relevant cost for material. So the relevant cost for material, before you can say this cost for material is relevant, you ask yourself a number of questions. The first question is, this order requires 300 kgs of material A or 400 kgs of material B. The first question is, do we have the material in inventory? The answer is either yes, we do, or no, we don't. So if the answer is yes, we have the material in inventory, we move to the next question. So if the answer is yes, we move to the next question. But we want to deal with no first. What if the answer is no, we don't? Do we have the material in inventory? And the answer is no. So what is the relevant cost for these 300 kgs? And the answer is no, we don't have this in inventory. So if the answer is no, we don't have them in inventory, it means we have to go and buy the material. The order requires 300 kgs of material A, and we don't have the 300 kgs of material A. So to determine the cost of this, we have to go and buy this from the market. So the relevant cost is the cost of going to the market and buying these 300 kgs of material. So the relevant cost is the market price of this material. Let's add additional notes below and say, since we don't have the material in stock, we have to go and source for this material in the market. We have to go and source for this material in the market. So this order requires 400 kgs of material and 300 kgs of material as well. But we don't have this in inventory. So we have to go and buy it in the market. So you now consider how much is it costing in the market. So let's assume the 300 kgs in the market. Let's assume we don't have the 300 kgs of material A. Material B, we have them, but material A, we don't. So if we don't have the material A in stock, you would say for material A, we want 300 kgs. Times how much are these costing if we are to go and buy them today? They'll give you the market price. So if in the market they are going for $5 each, it means the relevant cost for material A, we are done. It means for material A, it would be 300 times 5. That is if the material is not in stock. So if the answer is yes, we move to the next question. But if the answer is no, the relevant cost is the price to go and buy this from the market. Then we said that if the answer is yes, we have the material needed. The 400 kgs for material B, we have them in inventory. The question number 2 is, okay, this order requires 400 kgs of material. It requires 400 kgs of material B, but we have it in stock. The question 2 is it regularly used? Or regularly used is the same as was it purchased for another use? If it's regularly used or if it was purchased for another use, meaning we also want to use it in another order. Was it purchased for another use or is it regularly used? The answer again is either yes or no. But this time around, we'll start with no. If it's not regularly used, we then go to no. If it's not regularly used, we move to the next question. Move to the next question. So if we have the material and it's not regularly used, we move to the next question. But what about if it's regularly used? It means the material that we need for this order is already there. In our inventory, we have it, but it has another use. It is there in our inventory, but it has another use. So if the material is there, but it has another use, it's as good as we don't have it. So yes, the material is there, but there is another order that we want to process that is requiring the same material. So is the material in inventory? Yes. Is it regularly used? Yes. It's as good as it's there, but it already has another use. So it's not available for this order. So if it's there in our inventory, but it has another use, it's as good as we don't have. So if the answer is yes, it is regularly used, the relevant cost is the purchase price again, like on the first question. So the relevant cost is the purchase price. Why is it the purchase price? Let's go and put additional notes to that. Why is the relevant cost the purchase price? This is because the material is there, but we can't use it for this order. The material is there, but we can't use it for the order since it is another use. We can't, but we can't use it for this order because it has another use. Because it has another use, we must, so we can say it has another use. In order to go ahead with the order, we need to buy material for the order. So we have the material in stock, but it is another use. So it's as good as we don't have it. So what is the cost of the material? We again go into the market and check how much is the material cost. The relevant cost would be the cost of going into the market and buying this material. Because it's there, but it has another use. What about if it is there, but there is no other use or it's not regularly used? We are now moving to question 3. So if it's there, but it has another use, the procedure is the same with the first one. You just take the kgs that we want and you multiply them by the market price. Then let's move to question 3. Like we said, if the material is there in inventory, I'll give you a question then, which is going to be summarizing all those steps. So question number 3, is it regularly used? That was the question 2. Question 3 is, can it be sold or converted to another material? Can it be sold or converted to another material? We can give this the term opportunity cost. Can it be sold or converted to another material? We call it the opportunity cost. So the answer is either again yes or no. So can we sell this? Yes, it's there in our inventory and it's not being used regularly. What can they show? If they want to show you that it's not being used regularly, they can say it was as a result of previous overbuying. So if it was as a result of previous overbuying, it means it's not being regularly used. So no, let me just put that point here on no. What can show that it's not regularly used? They can say it's as a result of previous overbuying. Or it was bought in error. So as a result of previous overbuying or being bought in error, it means that it's not being regularly used. Now, let's move to question number 3. So question number 3 follows question 2. After we have said that this material is not being regularly used, we need to ask ourselves, can it be converted to another material, or can it be sold? If the answer is no for all these, there are 2 questions here. Can it be sold, or can it be converted to another material? If the answer is no, so it means we have the material in stock, and this material, we have it because we overbought it, and we can't use it in any other order, or we can't convert it, or we can't sell it. If the answer is no, then the material is not relevant. So you have this material in inventory. Someone is giving you an order which requires, let's say, 400 kgs of material. And you have the 400 kgs in stock, and they have no other use that you want to use them for. You can't even change them to another type of material, and you can't even sell them. So it means the material, the 400 kgs, is not relevant. You can't consider them as being relevant because they are already there and they have no other use. So you can just use them for this order without losing anything. So if the material is there, it has no other use, and it's what we need for the order, then it's not relevant. Now, what about if the answer is yes, it can be sold? So the person is giving us an order which requires us to use material which we have. But this material has no other use, but we can sell it. So if the material could be sold, there is what we call an opportunity cost. The relevant cost is the opportunity cost. What we could have gained if we had sold the material. So the relevant cost is the benefit or profit we could have obtained from selling. So we could sell this material. We could sell these 400 kgs that we have in stock. But if we decide to use them in your order, we are going to lose the benefit we could have derived from selling. So that is an opportunity cost. This is where the opportunity cost comes into play, where the material is there, but we have an option to sell it. So if we choose to use it in your order and we don't sell it, there is a cost there, which is the cost or the benefit forgone by not selling it. Then, yes, it can be converted. That could be the other answer. So besides yes, it could be sold, we can have yes, it can be converted. So the conversion option is where maybe it's material A, but we can modify it so that it can work in place of material B. We can have material A, which is maybe regularly used, and you have material B, which is not regularly used. But we can convert B to A. So if it can be converted, it can be changed to another type of material, which we need. So if it can be changed to another type of material that we need, The relevant cost is the benefit we can lose by not converting. The benefit, the relevant cost, sorry. The relevant cost is the benefit, is the cost. The relevant cost is the costs we could save by converting the material. The costs we could save by converting the material. Let me say we have 400 kgs of material B. Which is not regularly used. Can be converted to 300 kgs, or let's say can be converted to 250 kgs of material A, which is regular use. Which is regularly used. The conversion costs, are $100, and each unit, each kg of material B, material A costs $6. So what are we saying here? We have 400 kgs of material B. Material B, we are not using it regularly. We are not using it regularly. Maybe it's a material that we bought in error. And this person comes in with an order which requires material B, which we bought in error. But material B could also be changed to material A. We can convert material B so that it can work the same way with material A that we need. To convert material B to work in the same way that material A works, we need $100. So $100 would convert the 400 kgs of material B to 250 kgs of material A. So I was saying that the relevant cost is the cost saved. So I want us to calculate the cost saved by conversion. So if we were to convert the 250, it means that we save the cost of buying. Cost of buying 250 kgs, because these 250 kgs were being bought at $6 per kg. 250 times 6. So it means to buy these 250 kgs, we would need 1,500. So to buy these 250 kgs, we would need $1,500. But now we are just converting them. We're just converting material B that we have at $100. So instead of suffering, or instead of losing 1.5, we are just losing $100. So instead of us going into the market, buying 250 kgs of material A at $6, we can now just use $100 to convert 400 kgs to get the 250 kgs. So we are saying, if then we take these 400 kgs we have and we use them for this order, we would lose this benefit of 1.5. It means now we have to take 1.5 and go and buy material A, where we could have just used $100 to get these 250 kgs of material A. So how then do you work out the cost saved? So the cost of buying would be 150. So it means we would save 150, but still we are going to incur $100. So we would say the cost of buying less conversion costs. The conversion costs we were given them in total, that's 100. So the cost saved will then be 1.4. So the cost saved is 1.4. The cost saved would be 1.4. So we are saying if we convert the material that we have to material A, we would save 1.4. So the cost saved is the relevant cost. Then the last answer is yes, it can be sold or converted. Yes, it can be sold or converted. If there are two options, you can sell or convert. The relevant cost is the option with the higher benefit. It can be sold or converted. I'll give you an example where we can apply, I think, all these cases. So the relevant cost is the option with the higher benefit. The relevant cost is the option with the higher benefit. Now, example. KD Limited receives an order to produce a product X. This requires the use of different material as follows. You can say material type, units, kgs needed, then kgs available, that's in stock, So we have the cages that we need, we have the cages that are available. Cost price. Can you have the cost price? You can have the resale price. We have the replacement value. So for the cost price, resale price, and replacement price is per unit. The information here, let's have it per unit. Okay, so let's have the material A, B, C, D. A, B, C, D. The kg is required for you to produce the product X. So we need 200 kgs. Kgs available with 150 kgs. Material B, the kg is required 400 kgs. The kgs available 300 kgs. Material C, the kgs available 500 kgs. So the kgs required 500. The kgs available 600 kgs. Material D, kgs required 150 kgs. Kgs available 150 kgs. So have the cost price per unit, $4.50, $6, $7.80, $9. The resale price, $6, $5, $7, $8.50. Replacement value, $6.50, $6.20, $7.50, $9, or let's say $9.50. So additional information. I'll just try to make sure I incorporate all the cases. Additional information, we can be told that material A is regularly used in the production of the company's main product. Why? So we are using the material A regularly in the production of the company's main product. Why? Then you can be told that material B is in inventory as a result of previous overbuying. Material B is in inventory as a result of previous overbuying. But can be sold Then let's move on. Material C was bought in error. Material C was bought in error, but can be converted to give the same amount of material A needed regularly. Can be converted to give the same amount of material A needed regularly. The conversion cost per kg is $1.50. The conversion cost per kg is $1.50. I want you to pay attention to these cases because after this one, I'm moving to the next concept. Then lastly, material D was used in the production of a previously discontinued product. It can be converted sorry, for this one, let's change and say it can neither be converted or sold. It can neither be converted or sold. Then the question is, how much is the relevant cost for this order? How much is the relevant cost of material for this order? How much is the relevant cost of material for this order? How much is the relevant cost of material for this order? How much is the relevant cost of material for this order? Let's go to our questions. So we start with material A. So now we are answering the question. So let's have, or we can highlight, this is now the solution. So how much is the relevant cost for material for this order? So material A, so for material A, how much do we need? If we go to the question, the material required is 200 kgs. So you have received the order. This order requires 200 kgs. But so far, you have 150 kgs in stock. So it means there are 50 kgs that you need that are not in stock. That one, we can't even debate or question about it. So what are we going to do? Because already there are 50 kgs that are not in stock. So let's start with those ones. Because the question number one is, do we have the material in stock? For 150 kgs, yes, but it means there are 50 kgs which are not in stock. And for the kgs which are not in stock, what did we say we do? For the kgs which are not in stock, so for the kgs which are not in stock, for the kgs which are not in stock, we said that for the kgs which are not in stock, you have to go and buy them. Let's go to the questions and see if I'm talking about something that we discussed. Do we have the inventory do we have the material in inventory? Do we have the material in inventory? The answer could be yes or no. If the answer is yes, we move to the next question. So for 150, yes, but we need 200. It means there are 50 kgs we don't have. So no, if we don't have, it means for the 50 kgs, the relevant cost is the market price. So for the 50 kgs, we have to go and buy them. That one is no, we can't debate about that. So for the 50 kgs that are not in inventory, so for 50 kgs, these ones are not in inventory. So what is the relevant cost for these 50 kgs? So that's 50 kgs. So that's 50 kgs times, so for the material A, would say that's the 50 kgs, right? Times, can I just answer that? Hello? Sorry, now I'm in a lesson. So phone, I cannot phone as many numbers. All right, ndokufonera ndapedza. Okay, sorry for that. Let's continue. So material A, we are saying 50 kgs. For material A, we need 50 kgs. We don't have the 50 kgs in inventory. We don't have the 50 kgs in inventory. So we have to go and buy this. At which price should we record this? So maybe let's change, and the cost might confuse you here, but this one I would, let's call it this is the original cost which we had bought the material at. So if we are now going to buy them, we can buy at replacement value. So this is the price now in the market, or the current price. If they say replacement value or current market price, that is what we are going to use, because we don't have the 50 kgs in stock. The cost they are saying for the inventory we have, we bought it at 450. The resale value, are saying if we are to resell the inventory that we have, at what price would we resell it? The replacement value, we are saying if we are to go into the market today and we want to buy the same inventory, at what price can we buy the inventory? So we are saying the 50 kgs are not in inventory. So we'd buy them at 650. Would buy this at $6.50 per kg. So it means we would buy this at $6.50 per kg. So that would be 50 times $6.50. So that would cost us something like $325. Then let's move on. We are not done with material A, sorry. We need 200 kgs. So far, we have dealt with the 50 kgs. What about the remaining 150 to make this 200 kgs? We go to question number 2. Since we have the 150 kgs in stock, the question number 2 is, are these regularly used? And additional information number 1 is confirming that material A is regularly used. So if it's regularly used, what do we do? Let's go to the questions. If it is regularly used, the relevant cost is this purchase price. It's the same as the first one. So if the material is regularly used, it's as good as we don't have it. Because what we have, it has another purpose. So the relevant cost, again, you multiply with the purchase price. So for the 150 kgs, again, you're multiplying with 650. Why? Because the material we have, it has another purpose. So that would be 150 times $6.50. Those online, are we together? From material A, we have material B. So for material B, how many units do we require? So for material B, we need 400 kgs. And we have 300 kgs. So the same thing, do we have the material in inventory? So it means in inventory, the material that we have is not enough. So there are 100 kgs which are not there. So we need 400, but we have 300. So do we have the material in inventory? Yes, but partly. So it means the 100 that are not in inventory. The relevant cost for the 100 kgs which are not in inventory would be the purchase price. So for the 100 kgs which are not in inventory, the relevant cost would go for the purchase price. This is now material B, so 620. So you multiply, that's 100 by 620. That's 100, we multiply by 620. Then we move on to, what about for the 300 kgs in inventory? The 300 kgs that are in inventory, we ask ourselves, are these units regularly used? We have 300 kgs, are they regularly used? And the question, the answer to that question is on item B, on additional information. So material B is in inventory as a result of previous overbuying. And we've mentioned if it's in inventory as a result of previous overbuying, it means it is not regularly used. So move to the next question. We said if it's no, we move to the next question. So we are moving to the next question. Can it be sold or can it be converted? Can it be sold or can it be converted? If we go to the question, sometimes we don't need to be given this statement to say it can be sold. The fact that they've given us a resale price, it means it can be sold. So can it be sold? Yes. Can it be converted? They have not mentioned anything about conversion. So we are going to consider the option of selling it. So we said if it can be sold, what is the relevant cost? The relevant cost is the benefit or profit we could have obtained from selling it. So if we sold it, the resale price is $5. So for these units, the 300 units that we need, 300 kgs, if we had sold, we would get $5 per kg. So if we use it for this order, we are going to lose $5 per kg. So the benefit we are losing is the relevant cost. Since we could sell these 300 units, they are not regularly used, but we could sell them. So if we had sold them, we would get a benefit of 1.5. So if there is an option to sell, the benefit we could get from selling is the relevant cost. It means if we go ahead and we use this material, we wouldn't get this one from selling. So this one is an opportunity cost. Then let's move to material C. Let's move to material C. Lisa, let's move to material C. Okay, just a moment. Can you try to return the school? Then I'm going to try for the number 0. Record any funny answer. Chance of funny copy the number. Okay, let's proceed. So material C. So for material C, what was the issue with material C? So material C, we have 500 kgs. We have 500 kgs of material C. Sorry, we need 500 kgs for material C, but we have more than enough. So in this case, there is no need to go and buy. We have more than enough. So do we have the material in inventory? So in this case, all the units of material C are in inventory. So let's move to question number 2. Okay, since all the units are in inventory, because we need 500, but we have 600 in stock. We then move to the next question. Is it regularly used? If we go to item C, it's saying that material C was bought in error. So it means it's not regularly used. It was bought in error. It's not something that we wanted to buy. So is it regularly used? Can say no. Then can it be converted or sold? So remember I said that as long as there is a resale price, it can be sold. So it means for material C, it can be sold at $7, or it can be, there was an option to convert material C. If you look at material C, they say that it can be converted at a cost of $1.50 to material A. So let's weigh the options. If there are two options, I said that the relevant cost is the one with the better or the higher benefit. The relevant cost is the option with the higher benefit. So let's now look at the benefits of the two options. We can work it out below here. We can say the option to sell. Sell material C. If we sell material C, how much would we benefit from selling material C? So if we sell material C, it means we would get, we need 500 kgs. We are talking about the kgs that we need. So if we sell those 500 kgs of material C, what would we get? The resale price was given. If we resell material C, we would resell material C at $7 each. So if we were to resell material C, it would be at $7 each. So how much would we get? That's 500 times 7. Would get 3,500. Then what is the other option? The other option is to convert. The other option is the conversion option. So the conversion option, remember we say to calculate the benefit of conversion, you would say the 500 times. So the conversion would say for these 500 kgs, if we had bought them, so for the conversion option, you calculate the cost of buying, you less the conversion cost. So the cost of buying less the conversion cost, you would say if we had bought them, that would require 500 kgs times, remember cost of buying is given, times 750. So the cost of buying that's 500 times $7.50. So it means if we convert, we would save 3,750, but we then less the conversion costs. You then less the conversion costs. The conversion costs were given per kg. So the conversion costs were given per kg, it was $1.50 per kg. If you read item C, it was not given, we're not given the conversion cost in total, it was given per kg. So the conversion cost per kg, it was given as $1.50. It means the conversion option overall, the conversion option would benefit us. If we convert, would benefit 3,000. So there are two options here. We can convert or we can sell. If we decide to sell, we benefit 3.5. If we convert, we benefit 3,000. So for material C, the relevant cost is the higher benefit. So the relevant cost is the opportunity cost. In this case, the higher opportunity cost is the opportunity cost of selling. The relevant cost is the 3.5, which is the opportunity cost of selling. We compared selling and conversion. The higher benefit is the relevant cost. Sorry, not here. Let me just show the calculation. So we chose 500 times 7. Why did we choose this one? Because it is the one which had the higher benefit. Then lastly, material D. Because if it comes as a multiple choice question, they will just maybe focus on one type of material. But here we have looked at the different cases. So if it is material D, let's go to material D. Material D, we need 150 kgs and we have 150 kgs. So the material that we need is equal to what we have. Do we have it in inventory? Yes. Is it regularly used? If we go to material D, it was used in production for a previously discontinued product. So it's no longer being regular use. The product has been discontinued. So is it regularly used? No. Then third question, can it be sold or converted? The question stated that it can. I think, let me adjust here. I made an error here. So here, let's put a 0 and a 0 so that that statement makes sense. Oh, the replacement value, no problem. But for the resale price, 0. So meaning that you cannot sell it and get something. So can it be resold? No. So for material D, you have the material that is required. We cannot sell it, neither can we convert it. That type of material, what did we say about that? If it's there in inventory, it's not regularly used, it cannot be sold or converted. The relevant cost is 0. So it means that material has no relevant cost. If it's there, it cannot be converted, it cannot be sold, then it has no relevant cost. So overall, the relevant cost for this order, we then add up. The relevant cost for this job order, we then add up those costs. So the relevant cost is 6,920. Remember the minimum price rule. It means that if we're now charging them for this order, we can't charge them a price below 6,920, considering material only. So for material, the relevant cost will be 6,920. Let's move on to labor. So besides material, the task may also require the use of labor. So a relevant cost for labor. Remember the labor, these are the workers who are going to be working on the orders. So when determining the relevant cost for the labor, we also have to ask ourselves a number of questions. So if you're determining the relevant cost for labor, the first question to ask yourself is there idle capacity? Is there idle capacity? We are looking at, do we have labor that is being paid for hours that they are not working? So this looks at, do we have labor that is being paid for the hours that they are not working? So do we have workers who are being paid for the hours that they are not working? Do we have workers that are being paid for the hours that they are not working? So if we have workers that are being paid for the hours that they are not working, then for those hours, since we are paying them already, so the cost of labor for those hours, it's not relevant. If the teachers, for example, let's remember we were talking about introducing, we are offering ACCA and we are offering CIMA. So we want to introduce CIMA. Then for ACCA, the teachers are being paid a fixed monthly salary. And they are being paid, or they, let's say maybe not fixed, but they are being paid every day. They are being paid 8 hours per day. They get paid 8 hours per day. And now we want to introduce CIMA. And for CIMA, we are going to be using, in each day, we're going to be using 2 hours per day. So the 8 hours per day for ACCA, let's assume they were charging, these lecturers were charging a cost of $10 per hour. So they are working 8 hours and the charge is $10 per hour. Now we want to introduce CIMA. So we are going to introduce CIMA and the rate per hour is still $10 per hour. Want to introduce CIMA and the rate per hour is still $10 per hour. But then we are told that we can be told that the teachers are currently working for 4 hours in the ACCA department. And the same teachers are the ones who will be taking CIMA students. Or maybe let's change here a bit from 4 hours. Let's say they are currently working 7 hours. So they are being paid 8 hours, but they are currently working 7 hours. So if they are the same people and they are working 7 hours, it means they still have 1 hour that they are being paid for that they are not working. So if you're now looking at the relevant cost for labor, the 1 hour that they are not working, we can then say they should go and teach CIMA students. So for that 1 hour that we are paying them and they are not working, we can say it's idle capacity. They are being paid, but they are not working. So during that 1 hour, they can go and teach the CIMA students at no additional cost. But the other extra hour, because the CIMA students need 2 hours, but the lecturers will be free for only 1 hour. So the additional 1 hour is then relevant. So the relevant cost will be only 1 hour. Since the teachers have been paid for 8 hours, but are only working 7 hours. So it means for the 2 hours needed, 1 hour is not relevant because it has been paid for already. So is there idle capacity? So for the hours, the idle capacity, that is the hours that are available, which the workers are being paid for, yet they are not working. Those hours are not relevant. The next question is, if there are no extra hours, we also need to consider can overtime is overtime possible? So you can say if the labor is fully occupied, the relevant cost is the cheaper option between the use of, so the labor is fully occupied. The relevant cost is the cheaper option between the use of A, overtime, the use of overtime, B, taking employees, the opportunity cost, sorry, you can say opportunity of diverting employees who are currently working in another department. C, so can consider the issue of overtime, opportunity cost of diverting employees who are currently working in another department. We can also consider hiring new staff. So you consider the cheaper option from these options. So let's start with overtime. So if labor is fully occupied, so meaning that there aren't spare hours that are available. If labor is fully occupied, we may need to use overtime. So the relevant cost, let's say overtime, if overtime is used, the relevant cost is the cost of the overtime hours. We have to calculate, I'll look for a question to demonstrate this. We have to calculate how many hours we need as overtime, then the cost of those overtime hours is relevant. Then, besides overtime, there is the opportunity cost of diverting employees. So we can have, this task requires, let's say the task requires 8 hours, but the employees are not available for those 8 hours. We can say, let's stop them from the department that they are currently working. We can decide, let's stop them for these 8 hours so that they can work on this job. So these employees were not free, but we are stopping them from the department where they were working. We are stopping them so that they can come and work on this particular order. So in that case, we are going to lose the benefit that they were generating. So there was a department where they were working, and that department was giving us a benefit. And we have decided they should not work there for these hours and come and work on this order. So during that time, when they are working on this particular order, we are going to lose the benefits they were bringing. So the opportunity cost of diverting the employees, we look at this as the benefit lost. You can say this is the contribution. Lost from the hours of labor we have diverted. This is the contribution lost from the hours of labor we have diverted. The contribution lost from the hours of labor we have diverted. The opportunity cost of diverting employees. This is the contribution lost from the hours of labor we have diverted. So we are saying these employees were working in a department that was giving us a certain profit per hour. But now we have diverted them to work on this order. We tend to lose that profit per hour. So we tend to lose the benefit we were expecting in that department. So that's the opportunity cost of diverting the employees. We lose the benefit of the employees working in that department. So if we need the employees for 100 hours, you'd say 100 times. How much profit were they getting per hour in their department? How much profit were we getting per hour? You can say if we were getting $4.50 per hour. So it means the contribution would lose its 450, sorry. So that is if the employees were working in another department and you have to divert them to work on this order. Then besides the opportunity cost of diverting employees, we can have the cost of hiring new employees. So the cost of hiring employees, we can say for these additional hours, we can use overtime, we can use employees from another department, or we can hire new employees. So for the cost of hiring new employees, this one I think is just direct. So you just need to calculate how many hours do you need for these employees times the cost per hour. And also sometimes hiring employees, we might have recruitment cost. So for the cost of hiring employees, for the cost of hiring employees, for the cost of hiring employees, we consider the labor costs and any recruitment costs, because we have to recruit the workers. So if the cost of the labor plus the cost of recruiting. So if there are these three options, which one would be part of your relevant cost? The relevant cost is the cheaper option. from the given options. So from the given options, the relevant cost, you calculate the cost of each option. So for labor, the relevant cost is what is cheaper for you. The relevant cost is the cheaper option. What is cheaper? Should you hire employees? Should you use your employees over time? Should you convert employees from another department? Divert employees from another department? So the cheaper option would be part of your relevant cost. Let's go and look at the question. Let's look at a question. So let's look at question 78. So Clever Cloth is short of labor for a new once-off project, needing 600 hours of labor, and has choices as to where to source this. So there are choices that are available, and the labor is not enough, meaning we don't have idle capacity. So he could hire new temporary staff from an agency. That is the first option, the hiring option, at a cost of $9 per hour. So, example. So there is an option to hire. So if you are hiring the labor, you'd need 600 hours times. It was said to be $9 to hire. So the cost of hiring. So we have the cost of hiring. Then besides the cost of hiring, what else were we told? Alternatively, he could recruit new temporary staff at a fixed cost of advertising of 1,200, then only pay 6 per hour. He could recruit new staff. So the one option of using the agency is the one that we've done. So now we're looking at the second option, where he could recruit temporary staff. So recruit temporary staff. So the option to recruit temporary staff, it was said to be the staff would cost us 600 if 600, sorry, it would cost us $6, but there will be need for advertising cost of 1.2. So overall, this option would cost us, so that 600 hours times you'd pay $6 per hour plus the advertising cost. Then there was the third option. So the third option, the third option is saying what? You could also redirect some of the staff from existing work who are currently paid $7 per hour and who would make sandals that generate $3 per hour after all variable costs. So there are other employees working in another department. These employees are being paid $7 per hour and are making sandals that are giving us a profit of $3 per hour. Sandals are a good selling product, and Clever Clogs will lose the production and related sales while staff is working on this job. So the option to redirect staff, if we redirect staff, they would cost us $7 per hour and would also lose $3 contribution per hour. So would also lose $3 per hour contribution. So redirecting staff. So the cost for redirecting staff, that's $3 times 600. That's $3 per hour for the 600 hours. And additionally, we would need to pay them $7 for the 600 hours. So in other words, that's just $10 per hour. So it means they would need to be paid $6,000. So the relevant cost then for labor is the cheaper option. So relevant cost is the cheaper option. In this case, that's recruit temporary staff. That is recruit temporary staff. So the relevant cost would be to recruit the temporary staff, which is the last option. Let's move on. Relevant costs, let's look at assets. We might have a job order that requires the use of assets. So for us to conduct this order, we need to buy non-current assets. You need to buy machines for us to be able to process this order. So we need non-current assets to be able to process the order. So the first question is, do we have the assets already? If the assets are to be bought, so if the assets are not within the organization, are not there in the organization, the relevant cost is the cost of buying the asset. So we need, for this job order, we need a new type of asset. That is not there. We have to buy that asset. So it's a relevant cost. But if the asset is already there, the cost of buying the asset is not relevant. But what is relevant, if the asset is already there, what is relevant is if the asset is already there, The relevant cost is the cost of, so if the asset is already there, the relevant cost is the cost of, we can say is the benefit lost by not selling the asset if the sell option is there, not selling the asset. If there is an option to sell. Or not using it for another benefit. If there is another beneficial use we have, if we are now forced to use it for this order and we don't use it for that other benefit, the benefit we have lost is a relevant cost. But costs such as depreciation, they are not relevant. So remember, depreciation, they are not relevant costs. They are non-cash flow costs. Then the operational costs of the assets, they are also relevant. The operational costs of the asset are relevant. So to operate the assets, they might be cash flow costs that you have to incur. So those costs are relevant. So if the asset can be sold, the benefit we could have enjoyed by selling, that is a relevant cost. Now, let's move on. We also have joint, we can have joint products. We can have joint products. So a joint product So if a certain product is regarded as a joint product, it undergoes the same process up to a certain stage where we split off the products. So it undergoes the same processes until we get to the split off point. So joint products and byproducts, these arise when we are producing products that undergo the same manufacturing process. Joint products undergo the same processes during their production. Until they reach the split up point, until they reach the split up point. They undergo the same process until they reach the split up point. So we can buy a cow, buy the cow, or let's think of maybe not buying the cow. Let's think of rearing the cattle. So we can be in the process of we are a farmer. You are going to maintain the farm. You buy feed for the cattle from it being a calf up to when it's now a full-grown hay farm. So during the process of its growth, you are going to be paying for fertilizer, you're going to be paying, for feed, you're going to be paying maybe someone who is going to be someone who is going to be looking after the cattle. So there are payments that you are making for the cow as a whole. But when you slaughter the cattle, you are going to maybe have from the same, let's think of maybe it's a bull that you have slaughtered. From the same bull, you are going to have, maybe, you can split it to, you can have the head. From the same bull, we can have steak. From the same bull, we can have intestines. From the same bull, we can also have the skin. So these can now be sold separately. These are now being regarded as separate products. But when the bull was grown, these were incurring the same costs. These were incurring costs together as one product. But they got to a certain point when we decided to split them up. So during the growth of the bull, these were joint products. They were joint, indeed it was one product. So they were incurring costs as joint products. Then after they reached the split up point, we now have to separate these products, and each product is going to be recognized on its own. So also we have, besides the head, the steak, the intestines, we also have the byproduct. So a byproduct is not the main product. So the byproduct is produced together with the main product. But it is not the reason behind the production. During the rearing of these bulls, we are also going to be getting manure. Manure can be regarded as a byproduct. It's another product we're getting, which is not our main product. So the byproduct is produced within the production of the main product. So the joint products undergo the same process. I think I've mentioned that on top. They undergo the same process until they reach the split off point. So the split off point for our example is now when the bull has been slaughtered. Now we are having the head, the steak, the intestines, these different products. So after the split off point, we can decide whether or not to further process. We can decide whether or not to further process the products. We can decide whether or not to further process the products. So you can say, I'm going to sell them at split off point. I will sell the head, the steak, the intestines, the skin, or you can further process the product after split off point. Like the steak, you can now further process it to mince. You can maybe further process it to sausage. So you are now further processing after split off point. So when you are now making the decision as to whether should you sell it as steak or should you further process it. Normally, this is now where relevant costing comes into play. So at split off point, you decide to further process if the benefits of further processing are more than the costs. So after the split off point, the decision to further process is ideal if the benefits of further processing, are more than the costs. If the benefits of further processing are more than the costs. So if we are talking about the cost now, because we have to consider which costs. So there are benefits and costs. So there are joint costs and further processing costs. Joint costs, these ones are incurred together. Then there are further processing costs. So if we are talking about the costs, the relevant costs here, we are looking at the further processing costs, the costs after the split off point. These are costs after the split off point. These are what we consider. So we look at the incremental revenue and incremental costs. So we say, let's say the stake at split off point. Okay, let's start from upkeep of the bull. Let's just call it upkeep of the bull. In total, we incurred to maintain the bull up to the time we slaughtered it. We incurred a cost of 300. From that bull, we then decided, after we had killed it, we got the head, which weighs, let's say the head, which weighs 5 kgs. We also got the stake, which is weighing 200 kgs. We also got the intestines. These are weighing 50 kgs. Then we also have the skin, which is weighing 8 kgs. So this is what we are getting. Overall, to upkeep the bull, we had a cost of, we incurred a cost of $300. We incurred a cost of $300. Now, after we slaughtered it, this is what we are getting. Then, if we are selling the head, maybe per kg is going for, let's have the selling price this side. The selling price, it's, let's get the selling price per kg. Let's say it's $5 per kg. The stake, if we are to sell it at split off point, $6 per kg. The intestines, if we were to sell them at split off point, $4.50 per kg, or let's say $4 per kg. Then the skin, if we had to sell it to those maybe that make shoes, they would say maybe $2 per kg. So at split off point, we might want to share the cost. The 300 cost of upkeeping the bull. This 300 cost of upkeeping the bull, we might want to share it among, you might want to share it to say, okay, of the 300, how much should we allocate to the head, to the steak, to the intestines, or to the skin? So you can share the joint costs based on different methods. The first method, we can share based on, the joint costs can be shared based on the physical units method. So if we are sharing using the physical units, we are looking at the output. So we can share this 300 based on the output. So the 300, the joint cost of 300 can be shared based on the physical units. So you're sharing based on the quantities to say, okay, for the head, how much? So the total you're sharing is 300. So for the head, you'd say you share based on this, the proportion of 5. That's 5 kgs, 200. That's 50 plus 8. So all the kgs you get is 263. So if you are using the physical unit, you'd say for the head, it was 5 kgs over 263 kgs times 300. Then you get the cost for that you'd share to the head. So you're saying 5 over the total kgs, 263, times 300. So of that, the value you are going to allocate to the head, the cost you are going to allocate to the head of the 300 upkeep costs, the head is going to get 570 of those costs. Then from the head, you go to the steak. How much for the steak? You would say 200 over 263 times the 300 cost. Then from the steak, we go to the intestines. So for the intestines, you then say that's 50 over the 263 times 300. Then from the intestines, can move to the skin. So for the skin, that's 8 over 263 times 300. So we have apportioned the upkeep costs. We have apportioned the maintenance cost on the byproducts. We've apportioned the cost to the byproducts. So how did we share this cost? We shared the cost using the physical units, the quantities we produced, the units we got at split off point. We can also share these costs based on the sales value. So we can also share the cost based on so the joint cost can also be shared based on the sales value at split off point. So we can still share these costs based on the sales value at split off point. So if we are sharing based on the sales value at split off point, we would say, what is the total value? The same thing you can get if it's the sales value. You are saying if you are to sell the head, what could you get? Maybe you could first of all get your total sales here. To make it easy, we could say these 5 kgs, if you had to sell them at $5, what would you get? You get 25. These 200, if we had to sell them at $6, what would you get? You would get 1.2. The 50, if you were to sell them at $4, what would you get? You would get 200. The 8 kgs, if you were to sell them at $2, what would you get? You get that. Then now you share the cost based on these total sales. So in total, what are the sales that you could get? At split off point, what are the sales that you could get? So you could get sales of 1,441. So if we're sharing based on that, for the head, you'd say 25, which is the sales at split off point, over the total sales, 1,441 times the 300. Come here, the next one would be for the stake, it's 1.2 over the total sales, 1,441 times 300. Do the same for the intestines, 200. The last one, the skin. So if you're using the sales value at split off point, this is how we would share the cost. So remember, we are looking at relevant costs. Let's go up. We said the relevant cost after the split off point, we can decide to further process. So if you are now making the decision to further process, we want to know the additional cost. So far now we know the cost up to split off point. So if we further decide to process stake, so stake can either be, can be told that stake can be further processed. To get means. Share means €1. Is it this? Am I? Okay, yes, means. So we can process to get means. We can further process to get means. So if we further process to get means, it means that there are additional costs. And this would result in the following. A, if we further process, there will be a normal loss of 10%. So some of the means will be lost. So during the conversion process, there will be normal loss of 10%. Can be told that the kgs of means obtained will be 140 kgs. Before the normal loss. Before the normal loss. The cost of further processing will be $2.50 per kg. Will be $2.50 per kg. Per kg processed. So not $2.50 for, so we can say processed of steak. Per kg processed of steak. Then the last one, the selling price. Per kg of mince will be $9.80. Will be $9.80. So if we want to make the decision of whether should we further process the steak, we need to look at the incremental revenues and the incremental cost. So if we were to sell it today, we could get $2.49. If we could sell it today, the sales, sorry, if we go to the sales, currently, what would be the sales? If we were to sell the steak, is what it would get 1.2. And so if we further process, how much would we get? What would be the incremental revenue? So let's start with the incremental revenue. So our revenue would increase. Currently, our revenue, we are told it's being sold at $9.80 times the quantities would drop to 140. So it means how much revenue would we get? Is 140, sorry, before normal loss times 0.9. So if we are having a normal loss of 10%, so it means our revenue, we are going to say 9.8 times 140 times 0.9. So this is the revenue we are going to get. So if we further process, this is the revenue we are going to get. What about, so the revenue we are going to get from further processing, sorry, you can say revenue from further processing, then so the revenue from further processing, we less our current revenue. We want to look at how much is the incremental revenue. Current revenue. So currently before, or current revenue at split off. If we had sold at split off, how much revenue would we make? 1.2. If we had sold at split off, would get 1.2. So how much is our incremental revenue? So our incremental revenue, we are now looking at by how much is the revenue increase. So our revenue have increased by $34.80. What about our costs? If we further process, there are further processing costs. So further processing costs, our revenue is going to increase by $34.80, but the costs are going to increase. The further processing costs are going to increase. So what are the further processing costs? So the further processing costs, So the further processing costs here, we are told there will be $2.50 per kg processed. So there will be normal loss of 10%. There will be, under the kgs obtained, will be 140. Then the cost of further processing will be $2.50 per kg processed of step. So the further processing costs, so for the further processing costs, we are told that it's $2.50 per kg process, not obtained. So we processed for steak, we are processing 200 kgs. So it means we would incur a cost of 200 additional. So the decision to further process will result in a loss. If we had sold at split off point, let's check what would happen, sell at split off point. If we had decided to sell at split off point, the stake would have been sold. So if we had sold at split off point, the stake would have been sold at 1.2. And the costs at split off point, the cost of at split off point for the stake we had said is 249.83. So if we sell at split off point, we are likely to, we actually make a profit of that. So the decision to further process is not ideal because further processing is actually resulting in a loss. If we further process stake, it's actually the further processing costs are higher than the extra benefits. So that's what we look at if we are looking at the decision to further process. Does it result in an incremental benefit? Or it's actually better to sell it at split off point? Okay, so for today, we're going to end here. Then, so for today, we're going to end here. Then next lesson, we're going to look at CVP analysis. So please go and read this and attempt questions. We are behind time. We have to cover quite a lot. So we might not have all the time to do the questions live in class. So for now, you need to be practicing alone so that maybe when you are done with all the topics, you can then look at revision. So for now, thank you so much for your time. I don't know if there are any questions before